Over the past 30 years or so, large real estate companies, often franchise organizations, have grown to dominate the market. However, during the last few years, technology has made such drastic changes to the real estate industry that the tide has changed. Bigger isn't better anymore, folks. Can a smaller company compete with a big box real estate firm, or can they not only compete, but at the same time beat them out of service and added value? Bottom line, good agents, brokers are getting more independent. And if you look at the history of this, in the last just couple of years of the pandemic alone, more than 150,000 Americans have become real estate agents in the past 2 years. You know, with those television shows, the rise and grind gurus painting the profession as a path to the riches, but only a fraction of them will actually make a living selling homes. You better be doing other things too. And even those agents face an uphill climb. So before agents can surrender half of their earnings to a brokerage fees, they need listings. To get a head start and build a network, early career agents have increasingly opted to join brokerages teams, so teams within the agencies. Take the big box company Compass, the 800-pound whale, the white whale, for example. The focus on share price is also important because Compass pioneered the use of equity grants and stock options to attract employees and agents. It also allowed agents to swap commission dollars for stock options or restricted stock. You should have read those contracts. After the IPO, Compass agents expressed excitement about the ability to build wealth through stock. Some rainmakers even compared it to getting in early at Apple and Amazon. Yeah, right. Agents, are not sophisticated private market investors. Some are, so it is fair to now expect them to ask those hard questions of Compass and other companies. I hope you do. Because top agents lured with promises of stock options and other incentives, my advice, no matter what you do in life, before you sign that contract, make sure you hire a lawyer to review your contracts with the brokerages you're going to be hired with. So in the future, or any contract, where you might be signing your life away for that matter. So CEO of Compass said, pretty candid, never in my time at Compass have we seen such a big downturn in such a short period of time. Refkin said on a firm's earnings call, more Compass layoffs to come this October. Affected roles in the second cut this year, he said, won't impact agents. However, Compass CEO dropped a bombshell about one of Compass's most effective recruitment tools. The company no longer offers equity or cash incentives to new agents. Venture capitalists, they pumped over $1.5 billion into Compass, a startup that promised the use of technology, in the residential brokerage business. And when the company went public last March, it raised another $450 million, bringing its total investor haul to $2 billion. A record-breaking number for a sector that Silicon Valley has long avoided. So the residential brokerage Compass lost an unprecedented, stunning $101 million in the second quarter and nearly $300 million the first half of the year. So in his most recent letter to employees, Refkin blamed rising interest rates for a hit on Compass's bottom line. Sir, before interest rates up, Compass was losing money. Now interest rates go up and we have to lay off 400 people. So bottom line, home sales across the country have slowed down this year. In its latest earnings report, Compass projected a full year revenue of 2022 between $6.15 billion and $6.45 billion, well below earlier guidance between $7.6 billion and $8 billion. So we are now preparing for the real estate market this calendar year to be nearly 25% below where industry experts believed it would be just 6 months ago. He wrote, never in my time at Compass have we seen such a big downturn in the market in such a short period of time. Hey, it's all transitory. I saw the forest through the trees a year ago. Compass, which calls itself the #1 brokerage in the U.S. and has for years hyped its technology and has billed itself more as a tech company than a real estate broker. You know, bottom line is they whacked folks over the head with that earnings call. So let's look at some of the highlights. Kind of broke this down. Where Compass is at, the big box brokerage, compared to boutique. So with another huge loss of $101 million, this time bringing the total losses since 2017 to an astonishing $1.73 billion. A real estate brokerage, they're crying right now. So with Q2 revenues that barely grew and missed earnings, with shocking cuts in the Q3 revenue, forecasting a 25% plunge in revenues, with analysts, had expected revenue growth. So CEO Robert, during the earnings call, the Fed took repeated actions which have had the direct effect of driving down our revenue. So like I said, Robert, help me understand. The company was losing money when interest rates were low. You weren't making any money. So you didn't see the forest through the trees on that with the inflation. With another, he said we're preparing for another 25% drop overall in the industry. And they didn't see that coming, 6 months ago. And with a plan to cut costs and buy a lot, a company whose business model had been growth at all costs. Take a look at this chart of the stock price. Pretty incredible. I bought some of this stock at the recommendation of an employee there. The shares have plunged so much that today's after hours debacle is barely visible. If you look at this chart, it's pretty incredible. So the cost cutting thing is funny because Compass was never designed to make a profit in the first place. It was designed, to rake in cash from investors by promising them forever growth and then blowing the cash to achieve that growth. In its startup phase, it raised $1.5 billion, including from the geniuses over at SoftBank. And then it raised another $450 million during the IPO in April 2021. Remember WeWork? SoftBank gave that CEO a ton of cash and said, go out and play. So Compass spent the past years going around the U.S. blowing this money by overpaying for real estate brokerages and poaching brokers and other brokerages, promising them money and stock-based compensation to the moon, and by plowing large amounts of cash in developing its much-hyped software platform, all based on the promise of forever growth. And they forgot about profits. And I listened to this individual without doing my research, and I put 12 grand into it. I'm not happy. But now this scenario has gotten, shellacked by the downturn in the housing market and the projected plunge in the revenues. So in its prior earnings call on May 12th, Compass already announced that it stopped all expansion into new markets and buying other brokerages. In early July, Compass announced it would lay off 10% of its workforce. That's about 450 employees. So, in the recent earnings release, it said that market conditions were extremely challenging in Q2, and it announced a new cost reduction program that would cut about $320 million in operating expenses over the 12-month period compared to the 12-month period through June. And this cost cutting would allow them, to generate positive free cash flow in 2023 in this environment of, sharply dropping revenues. So yeah, they're going to be cash flow positive during a 25% downturn after having burned huge piles of cash during the hottest real estate market ever. Yep, I got it. Okay, we'll see. Specifically, we plan to reduce our two biggest areas of expense. The CEO said technology and incentives to acquire agents, they said during the conference call. So Compass, has a reason to make this desperate move. It may be running out of runway. They're running out of runway, baby. It is reported net cash used in operating activities of $120 million in the first half of 2022. It ended the quarter with $430 million in cash, down from $618 million 6 months ago. So at this burn rate, you can count on your fingers, how many quarters the company has left before the cash will be all burned. So to be fair to Compass is a company I follow, I have friends that work there. Some of what they have done is quite damn impressive. Compass insiders have complained that the firm has, been a target, has a target on its back, accusing the media of bloodlust, but the target didn't magically appear there, my friends. The attention on Compass is because of its spectacular success in fundraising. People are jealous. And its, ability to grow by acquiring rival firms or recruiting their top agent. It unseated top firms to take the top spot in Real Trends in 2022 rankings of brokerages by national sales volume, with $251 billion in sales across 224,000 transactions. In Manhattan, the firm placed third on the Real Deals rankings based on closed sell-side deals. So those are impressive numbers, and unfortunately didn't translate to profitability through the firm's loss of $108 million in the first quarter of 2022. I'm sorry, it's all about profit. Compass isn't the only real estate company, though, feeling the pain of slowing market, which has spurred cuts across a lot of big box brokerages. And Redfin laid off 470 employees, or 8% of its staff, in June. So in the mortgage industry, has been hit hard. More than 4,000 employees across at least 10 companies have been laid off since the beginning of the year, including at major institutions like JP Morgan Chase and Wells Fargo. So I think, my personal opinion, I think the best CEOs, and you're the CEO of your own business as well, are always on the lookout for potential threats. Bottom line, make sure no one's out there with a big knife trying to take you down. The people with this forward-thinking approach will survive this current market madness in the global markets. And this is across a lot of sectors and companies. We need more balance in the marketplace, and including the real estate sector. So during the last 2 years, a lot of people got into the real estate business that have no business working in it, period. They need to go. Boutique firms are fully equipped with all the latest innovations, in my opinion, and the MLS technology that allows both small and large-scale firms to serve their clients diligently. However, with boutique firms, clients get more of a personalized and customized service that is not restrictive as large-scale firms that tend to have more red tape. In large-scale brokerages, the companies place many rules and regulations that serve to restrict the ability of the agent and using innovative methods and technology to help their clients. And that's what we can do. And my opinion is, right now, you have to be creative as a real estate professional, whatever profession you work in. There's going to be a balance in this market. This market has been way out of whack during the pandemic. And as a real estate professional, you just can't focus on being a realtor. You have to have multiple revenue streams. This is not the only thing that I do as far as being a real estate agent, broker. We have other hopes and aspirations, what we're doing when we're doing other things in other industries and consulting for Fortune 500 companies. And I think it's important to have multiple revenue streams right now. Sure, if you're a top performing real estate broker in wherever state you work in, and that's your only source of revenue, that's great. I have the personality, no matter how successful I became in real estate as a broker, I would still do other things because I just can't do one thing. But you're going to have to be creative right now, and there's going to be a lot of corrections across the markets. And I think it's a good thing. There needs to be change, and people have been milking this too long. And a lot of these companies are not focused on the right things. It's all about profit. You got to put that into your models and price the profit in. Take care.